Lyft announced that its CEO Logan Green and President John Zimmer are going to step aside, making way for incoming CEO David Risher, who's a former retail executive at Amazon. Risher going to take on that CEO role on April 17th. Green and Zimmer will transition to serve solely on the board. Let's bring in RBC Capital Markets Internet analyst Brad Erickson. Brad, it's great to see you. So is this the solution that Lyft needed, right? It's sort of a distant second to Uber at this point in rideshare. Is this new guy going to fix it?
Yeah, I think, when we saw the news last night, we came out with some comments, and I think we kind of framed it as more of like a, hey, why not type situation, right? These guys have really struggled with, various aspects of, we'll call it misexecution and market challenges, competitive challenges. And we think they're operating at a structural disadvantage to Uber specifically here in the US. And so, yeah, I think, getting a fresh set of eyes on things, the founders, this is obviously a very emotional thing for the founders. I think getting them to step away more in a board capacity, less operationally so. You bring this guy in who is presumably a very good operator, certainly with some long track record of experience at Amazon, and we'll see what he can do. The details on the shareholder letter were scant, I would say, at this point, but apparently they're holding an all hands meeting today with the company, and probably likely to see more details emerge here on any new strategic initiatives.
Brad, Julie knows that one of my favorite Harvard Business Review stats to cite is the fact that after 3 years for a company being public, if their co-founders or founders still at the CEO helm, they tend to not see that show up in terms of the stock price reaction and it actually resulting in positive shareholder value. So this, no doubt, perhaps a good move for shareholders, but at the end of the day, shareholders probably still asking, what applicable experience does Risher have that can easily translate over into a ride-hailing business?
Yeah, I mean, I think clearly, when you go back to whether it's the Microsoft portion of his career or certainly the Amazon portion, Lyft is a two-sided marketplace. After all, digital marketplaces often have many of the same characteristics, and certainly he was the 37th employee at Amazon, arguably the biggest two-sided marketplace of all time in the world. And so I think that's kind of the most established statement we can make at this point about what his experience level is. But certainly when it comes to the aspect of, new customer acquisition, running a business that's fairly low margin inherently, but needs to ramp in the eyes of shareholders over time, there's certainly some experience there. We'll see how he does, as I said.
Brad, to be clear, you guys aren't stepping in to buy this thing on this news. And you say in your note, the challenge from here, address the structural disadvantage versus Uber. But how? And that really is the big question, right? I mean, how do they do that?
Yeah, I mean, we don't know. And yes, we are not stepping in even with this headline. Yeah, I mean, I think we also came out with an analysis just last night to kind of further support that view of Uber having a structural advantage. And I'll just give you two examples. We took a look at kind of the 10 largest markets in the US competitively, kind of side-by-side rides. And what we continue to find is Uber is driving declines in their pickup time. So meaning it's a shorter wait to get an Uber than a Lyft, and that's changing in favor of Uber. And so that drives conversion. And then separately, we're continuing to see evidence that Lyft is having to cut price, which we view as a reflection of needing to sort of stave off further market share losses. And so, that's a very, very tough compounding sort of virtuous cycle to stop once you're going down that road. As I said, management team's got its work cut out for them, I would say.
Previously, we've talked about the need for more drivers to come online as well in order to have either prices come down for riders and then even for, as you were mentioning, the wait times to decrease as well. Is that something that we're actively seeing? Are more drivers signing up to get back into the gig economy wherever jurisdictionally possible? And who is winning out the majority of those drivers from your perspective and your analysis?
Yeah, I think as coming out of COVID, and obviously we had a unique situation with federal and state level stimulus that was sort of impeding people re-entering the workforce in many cases where there have been a lot of, say, services job losses. I think now, in light of inflation and some of the other macro headwinds, you are seeing a bigger tailwind to those drivers coming back. And you've seen that for the last several quarters, and the companies have been vocal in talking about it. I think back to that structural disadvantage piece, though, we do think Uber has been generally winning that battle. And again, part of that relates to they can pay drivers more per hour because, for example, they're pricing higher and they're getting better utilization. And so if you're Lyft, and this is what we called out in our note, the risk here is that you have to sort of double down and dip back into paying more incentives, and that comes straight out of margin. As we've seen, we've had a few quarters of disappointing guidance related to this over the last I guess 3 or 4 quarters for Lyft, and we're flagging that as a potential ongoing risk here, again as a function of that structural disadvantage I keep talking about.
Yep. Poor Lyft, maybe. All right, Brad, thanks so much. Brad Erickson, RBC Capital Markets Internet Analyst.
Optimistic.
All good. It's great to have that perspective. I appreciate it.